The broadcast is now starting. All attendees are in listen-only mode.
Hey everyone, Stan Heller here. We're just testing things out, getting an early start, so we'll be doing the official welcome in about 3 or 4 minutes. And I just want to check if you can hear me okay. Please let me know. Just click a Y in the chat box, or maybe let me know where you're tuning in from. Gotta love these international forums, and welcome to everyone wherever you're tuning in from. It's great to have you with us. Mohammed in Vancouver, great to have you with us. Antonio, Peter from Calgary, I think. Yeah, Lawrence, welcome. White Rock, BC. John, welcome. Mike R. from sunny Edmonton. David C. from St. Louis. Peter from Burlington. Great to have you with us. Robert, welcome. And Sandy says, loud and clear from Kamoka, Ontario, here in Canada. So again, it's Stan Heller, and I'm broadcasting from Lethbridge, Alberta. It's kind of an overcast day here in Lethbridge, but it's supposed to be quite nice this afternoon. So maybe we'll get the e-bike out one more day. We'll try anyway. And Michael V, welcome from White Rock in BC, says can hear us well, so that's great. Chris from Winnipeg, great to have you with us. And Freddie from Belgium, there's that international flavor. And Mark from Indiana in the US, welcome. Great to have you with us. We're going to be starting in about 2 minutes, but just wanted to check on everything. Sounds like the sound is working okay. Quite an eventful week this last week. Quite an eventful week with the FOMC minutes, and maybe looking to slow down the tapering or the infusion of money into the market. And at the same time, on the US side, a tremendous jobs report. So lots of mixed signals here. I think we'll have our friend Dr. David Paul helping us sort it all out as well. So that'll be excellent. Dawn says, see and hear from Strongsville, Ohio. Great to have you with us. And Joe, welcome. Glenn from Medicine Hat, just down the road from us, about an hour and a half from Lethbridge. Great to have you with us. My hometown, actually, truth be known. Andrew, welcome from Calgary. Yeah, looks, Harry says, coming in nicely. And we've done all the sound checks, and we hope no computer glitches, but we just always cross our fingers. All right. Well, listen, I'm going to go ahead and I think, well, we're still a minute away. I better not just rush it too much. But I do thank everyone for chatting in that the sound quality is good and you can see the screen, so that's all good. Ah, there we go. We just clicked over to 11 o'clock Eastern, so now I can do an official welcome to everybody, wherever you're tuning in from, in VectorVest Global, wherever you're tuning in from. It's great to have you with us. Again, my name is Stan Heller, and it's my pleasure to be your host again this month for our International Online Forum. hope you've got a cup of coffee where you are, or whatever you like to have, maybe some tea or something else. I'll leave it up to you, but it's great to have you with us, everyone. So thank you so much for coming. And just make sure your computer speakers are turned up a little bit to hear the audio portions, and close some open tabs. We've got some really great content for you again today. I know a lot of you from the emails are really looking forward to hearing Dr. Subak again about thematic ETFs. He really has become the expert in thematic ETFs, and we really appreciate it because there's so many that are coming on stream, and it's wonderful to have an experienced guide kind of help us sort that all out. So Dr. Subak is our keynote speaker, and of course we'll bring in Dr. David Paul shortly as well to talk about the markets in the UK and the US, and I'll look after the other 3 countries and so on. But we're going to go fairly quick so that we give Dr. Subak as much time as he needs to really dive into thematic ETFs. Just know you've all found the VectorVest YouTube channel, and immediately after the webinar, we go for about 90 minutes. Immediately after the webinar, it basically starts to replay right away again, so you can watch it again as often as you like all weekend. So that's kind of a nice feature of the YouTube channel. And you can chat with other members of VectorVest on the YouTube channel as well. Something a little different this time. I usually try to get the slides out on the weekend, but we've worked something out with VectorVest that they can create a link for the slides. So you're going to get an email on Monday with the slides on Monday. So just to let you know that. We've got so many people attending now and watching the recording and asking for the slides that we thought it's better if VectorVest just, they can push one button and get them all out, whereas it takes me a few hours to get out the slides. All right, so just quick risk disclaimer: there is risk in investing, no matter how well we think the market has performed of late. Again, there's risk in investing, and just know that everything you will see and hear today is provided for educational purposes only, should never be considered as investment advice. None of us are registered to provide investment advice, but we can certainly help you and empower you to make your own investment decisions using the VectorVest software and tools. Those decisions are yours alone to make. All right, so we're going to go through our agenda here, and we're going to start off with the VectorVest markets around the world. We'll bring in Dr. David Paul after I do the color guard report for all the countries. And then we'll bring in our keynote speaker, Dr. Ed Subak of Florida. I think this is his 4th or 5th time speaking to us about thematic ETFs, and it's always a popular talk, so make sure you stick around. And again, the recording will be available on YouTube at this same site, basically immediately after the webinar. And then VectorVest, the staff, on Monday when they're back in the office, will send you an email. I said tomorrow, Monday, on Monday, that will have a link to today's slides. All right, so I'm going to go ahead and talk about the color guard and try to answer any questions that you might have. I'm keeping my left eye on the YouTube screen so I can see the comments coming in, and hope you like what you see today again, as always. Always fascinating to me to be able to look at the color guard, and it's really helpful when we see a lot of green in all the color guards from our 5 countries that we provide service to with VectorVests. And so it's something we can all do now, is access every country. You just log into maybe your home country and then immediately start logging into one of the other countries using the flag that shows up on your login screen. So it's a really nice advantage to see how well the other markets are performing. In Canada, The color guard is mildly bullish. You can see we've got just the one green light, and it is in the RT column right in the middle here, the relative timing. So it's an important one. The buy-sell ratio is starting to move up, and we were as low as about 0.20, which really, according to Dr. Toledo, that buy-sell ratio is the canary. When it gets that low, you do want to start preparing yourself for a good bounce off of that low. And the MTI the same when it gets down near or below 0.60 in all of our countries seems to be the benchmark historically. So, there's always a better time to buy, and when the market is coming off of a low, that's often a better time to come in. But we've got some green. We had some asterisks or stars beside the green in the price column, which shows there's momentum behind the move. Just a little slowing of momentum on Friday, but everything is good. And we're up 18.8% year to date in Canada, which is just a really solid year so far for us. And making the biggest move this month since our October International Online Forum is actually the US market up. You can see at the bottom right here, up 7.53% basically in a month. And the color guard is bullish, and VectorVest advocates buying safe, undervalued stocks that are rising in price. So, we want to continue to play the market to the upside when we see this amount of green. We're nearing, with the MTI at 1.51 on the US side, maybe nearing a little bit of that area where we might lose a little bit of momentum, but all the indicators are looking quite strong and positive. So you got to be bullish when you have these opportunities. And here's Australia, somewhat bullish. Year to date, up 12%. So, a pretty good, 12%. If you could make 12% every year, you'd be thrilled, wouldn't you? I mean, I think you would anyway. You'd more than double your money in 5 years. So I think you'd be pretty happy. But in Canada, we're up 18%, and the US 20%. So 12% for Australia doesn't feel quite as good, perhaps. But just know you've got VectorVest tools to pick some of the better stocks and beat that benchmark, hopefully quite easily. 2 green lights in the color guard, and the buy-sell ratio coming off a low as well. Most recent low, 0.75. Now we're at 0.83. So moving up, and notice the confirmed up calls in every country. UK just got its confirmed up call on October 21st. But the markets have all moved up pretty nicely from those confirmed up calls. Yeah, Kamal says October is usually a risky month, and October was certainly slow, and November's been terrific. So here's the UK up 14.4, and green lights all across the top. That's what we like to see. Still lots of room to run, it looks like, and maybe David will get into it a little bit more, but they're in a confirmed up call since October 22nd. And in Europe, color guard mildly bullish. Notice that year-to-date performance, 24.39%, the best of our 5 countries. And if we look over to the right, the 1-month gains, we can see Canada up 5% just in the last month, since October 1st. US up 7.5%, Australia 4.3%, UK 5.9%, and Europe 7.2%. So everything's looking really good. And look at all the stars in the price column for Europe. Maybe slowing a little bit as of Friday, but the buy-sell ratio continued to rise. Okay. People are saying the sound is perfect, so that's good. I'll try to remember to speak up, though. I did put on the VVC graph since it was the leader this month in terms of a percent gain, and just look at that 3-month graph. October was solid and then pulled back a little bit, and then November it's been rallying higher. So this is basically your market timing graph with the VectorVest composite price. So Market timing, this is what we showed, or what I showed when we last met. That was October 2nd, the Saturday. And what I really wanted to highlight here, this is the channel that we were in. And I just kind of made the comment right about there that this was a possible support area because we've got support down here, we've got support right there, and we did have some resistance overhead, but I thought this might be a little bit of a support level because of the candlestick patterns here, and that was October 1st, the Friday. And notice over at the right, the top 10-day price gainers, stocks over 20, a lot of petroleum still up in the top there. So things have changed a little bit. This is a little bit longer than a 6-month daily, but notice this right here is where we were at last month and where I thought we might see some support right in here. And sure enough, we did get a good bounce. We came up to the resistance, pulled back just a little bit, and then we've had a little bit of a breakthrough resistance here. The 65-day moving average is really strong for our Canadian market. Here's our confirmed up call, and notice the last confirmed up call was November, way back here at the bottom left. So even though the market has slowed here a little bit in August, September, we've had a really good market. And just the emotional market cycle, and I think this is really important when we see such a lengthy uptrend as we've had. The restart of another uptrend on the U.S. side and Canada with confirmed calls. So I think it's important to look at the emotional market cycle. Rational investors can go confidently bottom fishing and look for buying opportunities when the market has been battered. Well, we were down in Canada at 0.20 for the buy-sell ratio, 0.80 for the MTI and below, and we've had a really good rally from there. So currently the MTI is at 1.11, so we're in that optimism phase in Canada right here, and we've still got a little bit of excitement and thrill that hopefully we can enjoy as we go forward. Now the US side has gone through that. Oh, by the way, notice the buy-sell ratio when we met back on October 1st, the buy-sell ratio was 0.26. So it really is the canary in the coal mine, letting us know that the market was really getting oversold and ready for a bounce. So there it was, and buy-sell ratio on the US side in October 1st was 0.61, and currently it's 2.0. There's no historical benchmark to tell us when the buy-sell ratio is too high, but the MTI, on the other hand, when we get up to this 1.5, 1.6 area, this is that overconfident area where everybody thinks the market's just going to keep going up, and inevitably we start to lose momentum and may even pull back a little bit. So we shall see. We shall see. All right. Any questions so far? Looks tame on the questions, so that's great. I just wanted to mention a couple of things before I turn it over to David. Your own mutual fund. In Canada, we now have Canadian Depository Receipts, our CIBC, Canadian Imperial Bank. So one of the big five banks has come up with this arrangement where they're trading fractional shares of 10 really big successful companies, and you can see the list here. And I'm suggesting, you can almost create a mutual fund of these companies, and about 1/10 of the cost as it would cost you to buy the U.S. stock. So it's a really good opportunity that way. Just make sure when you're buying that the share price is rising, and maybe even wait for a new buy rating from VectorVest if you're looking at that. So, and how well does it work? Well, here, oops, I think I pushed the wrong button there. There we go. So here's just a quick test from October 8th to Friday. And you can see there in the left is the Canadian CDRs. Obviously, Tesla has had a terrific run here, up 55% already. But these are the other ones, and they are very closely tied to the underlying US stocks. In fact, the basket 7.50 for the Canadian depository receipts and 7.47 for the underlying stocks. All right, so wanted to mention that. I don't think the picture is foggy, Wojtek. Well, I hope not anyway. Anybody else having trouble with the visual? It seems to be very clear from my end. All right, so anyway, did want to mention that. I mentioned last month about the new watch list that we have under global market ETFs here for under the cherry picking folder. Yeah, everybody else is getting clear picture. Tony says maybe a little bit off a bit, but most people are seeing it nice and clear. So, and I will go slow on the transition of one slide to another. So global market ETFs, you can see Peru leading the way this last month, up 11%. Last month, recall, all of these numbers were in the red for the 1 month performance, and they've all rebounded pretty nicely. There's the Russell 2000, the NASDAQ, and then Philippines, Israel, Switzerland, Canada, up 8%. So you can play the Canadian market with an ETF as well. And there it is there. And then there's the sector ETF. So I put in the names here just as a reminder to myself sometimes. I can tell you that global solar, the chart kind of looked like this, sloping from top left to bottom right for quite a while. But boy, it's coming back with a vengeance. And if we see more initiatives on climate, this could really continue to go. And it's up 18% just in the month. PBW up 18% as well. Consumer discretionary up 16. So I bring these forward because it's good to take a look at these. You've got them all in the list. You can right click on the watch list average and see how well the entire basket is doing. And of course, with the individual ETFs, there's no better indicator than just RT crossing above 1 is a great indicator on ETFs. So these are really strong ETFs to have a look at. Yeah, Kamel says the infrastructure bill of President Biden probably is helping TAN and the other clean energy and solar companies. Yeah. Yeah, commissions. There's only 2 brokers in Canada that I'm aware of that offer free commissions now. BMO started the ball rolling, and now Disnet has come on board and offering free commission as well. But other than that, we pay. All right. Listen, a couple of things I want to just share with you while you study these pictures here. I'm just going to play a really quick recording. I think it's just over a minute. But Patrick France, a senior instructor, is leading the VectorVest charity drive, I guess, for children for that have needs this Christmas, and doesn't want to leave anybody left behind. So I'm just going to play Patrick's explanation of the charity, where the funds are going. So just while I push a couple of buttons here, bear with me, but it should work out pretty well. And it's just over a minute, and I hope you'll find it interesting. And if you can help in any way, I know it's going to a great cause. So I'll just play the video and then get right back to you. Here we go.
Hey everybody, and welcome to the VectorVest YouTube channel. My name is Patrick France. I'm a senior instructor here at VectorVest, and I've been here for over 10 years. I am pleased to announce that I will be bringing a brand new event to the VectorVest YouTube channel. This event will be starting on November 9th and running until December 10th. Every Tuesday and Wednesday starting November 9th at 11:30 a.m. Eastern, I will be live on the VectorVest YouTube channel, where I will be doing some live trading answering your guys' questions, maybe giving you guys some tips on how to enhance or better your own trading. Also, if you have questions about analyzing your own stocks, I would be glad to do that as well for you. During the next month, our goal is to raise as much money as possible to help kids less fortunate coming into the holiday season. So for every new subscriber that the VectorVest YouTube channel gets up until December 10th, VectorVest will make a donation on your behalf. So I can't do this without you, and I strongly urge you to come hang out every Tuesday and Wednesday at 11:30 a.m. Eastern as we try to grow awareness about this cause and really help make this whole holiday season brighter for kids that are less fortunate. Also, as a special bonus to you, every single live stream will be doing a random giveaway. But the kicker is, to be able to win, you have to be there with us live. So once again, I'm asking for your help to make this year's holiday season brighter for those less fortunate, and head on over to the stream for your chance to win some amazing prizes. So I look forward to seeing you guys there starting November 9th, 11:30 a.m. Eastern, right there on the VectorVest YouTube channel. And don't forget to tell all your friends, family, kids, grandparents, whoever it may be, make sure they're all there as well, because this is an event you won't want to miss out on. So thank you all for your time, and let's make this holiday season the best one yet.
All right. Well, thank you very much, Patrick, and thank you for the kind comments I see in the chat box about Patrick's efforts, and very much appreciated. Jim's asking if I'm going to Tampa, and I will be there, Jim, but not in person. I'm really pleased to be part of the picture of the team that most, I think, are going. I know Dr. Paul is going as well. He's not in the picture. I love this picture because look how thin it makes me look. You know, it does make me look like a bit of a cone head, but it certainly makes me look thin and tall, taller than anyone. So, and I know I'm not taller than Jerry. So there we go. But January 7th and 8th is the 2-day investment. 2022, we have to say already. But here is sort of the details, and you can enroll now at $95. I don't think I've ever seen the price for the 2-day event so low, and obviously that has a lot to do with the COVID, but you can plan to attend in person or plan to attend through the live streaming. Just $95. You do get the recordings to keep for a year after the course, so I think there's a real opportunity there for you. VectorVest.com/Tampa if you plan to attend the live presentations in person, or if you want the live streaming, just go to VectorVest.com/stream. So thank you very much for thinking about that. And now I'm going to bring Dr. David Paul in, our VectorVest UK Managing Director, and he's going to share with us his insights into the US and the UK market. So David, welcome on board. We'll just get your mic going here. And I will give you the screen. I think you'll have to accept that. There we go. All right. Now, not hearing you yet, David.
Good afternoon, everyone.
There we go. Sounding good. Thanks, David.
Thanks, Stan. It's a great pleasure to be here. Stan, I thought that was Bruce Willis in the photograph, not you, but you look a bit like Bruce Willis.
Well, some people around Lethbridge and particularly my family do call me an actor at times, so maybe I've got some of that Bruce Willis in there with me. Thanks for mentioning it.
Good afternoon, everyone. I'm going to try and be as quick as possible because we want to give Dr. Subak, our guest, as much time as he requires. So I'll breeze through this. First thing I have to put up is the UK disclaimer. And I say the same thing every month, I know, but I'm qualified to give financial advice, but I can't do so because I haven't sat down with you and done a long and a detailed fact find. I'm allowed to talk about those shares that I own myself, but I have to make it very clear that although those shares are suitable for me, they may not be suitable for you. So that said, we can move on at pace. So pretty much covering a bit of ground that Stan's already done. So if I haven't mixed these up, that's the US front page of VectorVest. And as Stan's already mentioned, we've got 3 green lights. We have got an MTI that's at 1.51, which is getting up there towards that 1.65 number that's been quite useful to me in the past. The buy-sell ratio has moved up and moved up strongly, but it's still a way off the 4.25. That's sort of my yardstick for being emotionally stretched. And as you can see, the pointer is firmly in the green. So 2,700 buys, 1,300 odd sells. That's the best it's been for a very long time. So what we have last week, we had a dovish Fed, okay, and we had excellent earning numbers. So between those two things, that caused markets to exhibit animal spirits. We had a great ISM services number, 17-year high on that number, folks. We had jobless claims at a post-pandemic low, factory orders, an upside surprise, and the ISM PMI manufacturing, also an upside surprise. The ADP jobs number shot the lights out, and the only really slight negative was construction spending, which suffered from, at least the excuse was supply chain issues. So really good set of financial numbers being printed during the course of the week, which added to the fun. And that's the VectorVest composite, which is a very broad measure of the American market, 8,000 odd shares. And as you can see, it's been stuck in a range since March. And it seems to have broken out of that range quite with a reasonable amount of strength, taken that level out, stopped at the old highs. And if I go into the charts a little bit, I can see that this is pushed up, but the MTI is also rising and the buy-sell ratio is also rising. So although to me it looks a little bit overbought in the short term, and we could easily have a pullback, maybe a 4%, 3-4% pullback. It looks to me as if there's much more upside, and that's in fact in sync with what I've been trying to tell the UK people for quite a long time, in that I believe that there's a very strong run up into Christmas. I wouldn't be at all surprised if the darn thing doesn't want to shake out a few people before getting going again. So, but an incredibly good week, as Stan's figures earlier have just shown. I hope you made some money out of it. That's the DEW, and certainly the DEW has been difficult since March. In a sideways market, anything that's constructed of moving averages would drive you to drink. And when the market starts to trend, they're the most wonderful thing in the world. We don't want to talk about Elliott because I get them ticking off, but that looks to me as if there's 5 waves up in that. So a lot of people will be taking that into account. So there's the S&P 500. I talk about it because I trade it for expenses and have been doing for quite a long time. It pulled back. We discussed this the last time, this 3-wave pullback. We needed to get above that top, a close above that top, to pretty much confirm that this pullback was over. And then all of a sudden it accelerated, and accelerated strongly. As you can see, whether you believe in the fib numbers or whether you don't, I think that most people have to concede that there's an awful lot of people who watch the levels. And One of the easiest ways to work out a target is that you take the pullback and you extend that pullback by the Fibonacci numbers. And the first one's 127 of that. So we take that height minus that height, multiply by 127. 127 is the square root of 1.618. You may think that's voodoo, but I assure you people are watching it. It went through that level like a knife through butter. And on Friday, it hit the 1.618 level. And last week at our UK Q&A, my target was 47.22. And the high of the day went exactly there, and then it came back. What's it going to do now? Well, it looks to me as if it's overbought in the short term, but I got out of my leverage positions on Friday, so that probably means it's going to keep going. An incredibly good move, and you can count on one hand the number of days where this market has kept going like this over the last 10 years. So incredibly strong move. I would suspect, although I said the same thing here, I would suspect we're going to see a pullback to that top before it goes again. We shall see, as Stan said earlier. The NASDAQ has done a very similar thing, and we've seen a breakout in the Dow. We've seen a breakout in the S&P, we've seen a breakout in the NASDAQ, and we've seen a breakout in the Russell. So all four measures of the American market have done the same thing. And invariably, before we get a decent run, all four have got to do the same thing. Now, those are my US bets, and I got out of them all at about 6:30 UK time last night, 5:30 UK time last night. And I got out of them because, first of all, they were all exceptionally profitable. I had one that I got out of at entry. That was Lincoln, which did nothing. But NVIDIA, Builders, AMD, and Microsoft have all been big winners. And that's NVIDIA. And somebody asked me the other day on, I think it was YouTube, do you trade anything else apart from the Wyckoff spring and the Gartley pattern? My answer to him was, I do, but I wish I didn't, because these things have got a tremendous history for me of producing big moves. That was a flag pattern. That was a really good trade there. There was a couple of trades in here which came to nothing, and got the stop up to entry and got stopped out of it. But that was an entry at 213, and I got out of this last night at 300. So that was very nice. And just remember, folks, that that's a leverage 5-to-1 leverage position for me. I brought the stop up behind me. Last Friday, we had an investment show here in London. And if I'd been at myself last Friday, I would have added to that position just here as it came out of that double inside pattern. So it's an inside day and then another inside day. When a market breaks out of a double inside, invariably it goes. I didn't think it was going to go with this sort of gusto. My own observation, ladies and gentlemen, is that when you get an exponential move like this, they very rarely correct by going sideways. They correct by pulling back. But that's anecdotal. I haven't got a million observations, but that's something. So I banked that. I banked AMD, I banked Builders, I banked Microsoft, and that'll keep me fed and watered for quite a few months. Life is quite different, folks, when you trade EAT. The UK market timing, well, everything is pointing the right way, and as you can see, we've got a little black star in the Friday's green light, which is telling us that the price is rising day over day and week over week, and the momentum as measured by the RT is also rising. It's called the RT kicker. If you put your cursor on that little black star, it'll tell you that. If we have a look, well, smart money got it wrong in the UK, folks. Pretty much all the smart money had done their sums, and they built in a quarter-point interest rate hike at noon on Thursday. That didn't happen. So there was weeping and wailing in the city bars on Thursday afternoon because the smart money was caught on the wrong side of the trade, especially in cable. That's the pound against the dollar, which fell through the floor, and in yields. There was an awful lot of very unhappy fellows about putting little pins into the Bank of England fellows. And as I said here in the slide, there was few taxi rides home. If you've made a heap of money for Citibank, normally they'll get you a taxi home. If you lost money, you ride the tube like everybody else. So no taxi homes, very few taxis home on Thursday night. That's the UK market timing chart. We've looked at this every Monday afternoon. As you can see, there's a little bit of divergence here on the MTI. Price is flat, MTI fell and then moved up. That's always a good kicker. I think I've got a blow up of this. I have. Last Monday afternoon, I felt, same as in the US, that if this was a three-way pullback to support, and that support very defined on the VectorVest composite. The VectorVest composite, folks, does a much better job of analyzing the UK market than the FTSE 100, which is really an international index. We can see here that it took its while, a long time to break through that, and then I think it was on Monday or Tuesday it broke up through that. So it came off the old high, which is hardly surprising, but to me it looks as if there's quite a bit more oomph in that. I'm holding all my positions, and I've added a couple of positions. I really didn't do that much last week, but I've added back into Lion Trust. And I'm over 80% invested now. I've added to a couple of positions along the way, and we'll talk about those all on Monday afternoon. Anybody that's interested in a great deal of detail. I get emails about Sylvania Platinum because it's fallen back a little bit. I'm still holding it. I don't think there's a great deal of danger at these levels. Famous last words, I know, but it's still on a VectorVest hold. The gold market looking better than it's looked in a while. A nice big outside week on the gold market. So that's the most positive thing on the gold market I've seen. So we had an inside week and then an outside week. That's quite a strong pattern. And silver, I think, looks stronger than gold. And silver's exhibiting one of my famous spring patterns. And I think that silver looks much stronger than gold at the minute. But nevertheless, they will both move in unison if they're going to move at all. Clearly, interest rates being kept low, inflation raging, with any luck, gold and silver will move. Although, as you know, it's quite an embarrassing situation because I've been saying that for months on end. The platinum market looks fine to me, folks, so don't allow yourself to get psyched out of it. As you can see, we've got resistance here. That resistance became support. It's pulling back a little bit, and I don't think there's any to worry about. It would be really nice to see that level taken out. That level takes out. I think that Sylvania and other platinum miners will move, and I shall be adding to that position at around that point. Okay, and the copper market is doing exactly what I would expect it to do. A nice run up here. Sooner or later, there's going to be the incredible shortage of copper. It's coming. We broke out of this five-wave triangle. It shot up. It's now come back and tested that level. And last week it traded a doji. If you're not in any copper stocks, or wait for it to close on a daily basis above the high of last week, folks. Very positive on copper, and we're going to need a heap of it in terms of this ESG agenda. That's Blackrock Gold Mining. All the usual big mining suspects are in there. It's my biggest position. as you can see, and I've added to it 3 times. The last add is slightly underwater. As you can see, it came back and took out those stops, and it's now pushing up strongly. Needs to get through this trend line. If you're in, great. If you're not in, then wait for it to break those highs. I've blown up this little bit here, and if I blow up that little bit here, we can see that on the daily chart, this is a textbook 5-wave pennant pattern, and that's invariably quite a bullish pattern, and we're right at the end of the 5th wave. So with any luck, that's going to break relatively soon. I'm not worried about it at all. And oil. Well, before we move from copper, folks, I forgot that HSBC has just gone overweight in China again. And they believe that the worst of China is over. HSBC, Hong Kong and Shanghai Banking Corporation, call the Chinese markets exceptionally well. They've gone overweight in China. So oil, God, we've come a long way here. There's no real resistance in sight until 100, 110. The daily chart came back to that top, and last week, on Friday, had a pretty good day. I think this $80 level is key. But we've come an awful long way in oil, so just be careful there. I have one position given back quite a bit in that Royal Dutch Shell, although got into it right at down here somewhere. So I'm reasonably happy with that. I'm looking for a push towards 18 on that once more. I firmly believe that certainly in terms of yields, the commodity market is where I want to be in terms of yields, and that explains that big position on Blackrock World Minerals. I'm still waiting on gold, although the 2 gold shares that I've got, in fact, are paying exceptionally good dividends as well. So I think more of the same, folks, between now and Christmas, but I wouldn't be at all surprised that we've got to sweat out a bit of a pullback. I hope that helps. Anybody that wants to come along on Monday afternoon, it'll be a pleasure to see you. Stan, thank you.
Thank you. Thank you, David. That was awesome. Covered a lot of ground and all wonderful information. A lot of great comments in the chat. I noticed not too many questions. When you were talking about platinum, Eaton was asking how about uranium and lithium. And I know in Canada, those stocks have been zooming higher as well. Not sure if you have any insights on those, but that was about the only question that came up.
I think uranium is just starting. Uranium had the toughest time of any commodity. It was in a 10-year bear market, and there's going to be an awful lot of uranium required on this greening agenda, especially for green hydrogen, etc. So I think that uranium has got a big future, and that the trend in uranium is probably just starting. And in fact, that was one of the shares that I spoke about at the Stock Summit the other day, if you remember. I nearly called you Bruce for a moment there.
Yeah. All right. Very good. Well, listen, a lot of great comments coming in. I'll just answer a question from Lou. He's looking for those the sector watch list. Those watch lists are under the cherry picking folder. Canada, US. You'll find those watch lists. Actually, the US. Actually, if they're under the US software, Lou, maybe that's the issue. If you're looking at Canada, they won't be there. All right. Well, David, thank you so much. I'm going to bring Dr. Sue back in. So thank you and have a great rest of your day. So Ed, I'm going to activate your microphone and going to make you the presenter. If your screen is ready, you can accept that responsibility. Oh, I just wondered, just before I do that, I think I just have to advance my slides here. Oh, no, I'm okay. Okay, so Ed, I think you just have to agree now to accept being, there it is. Yeah, you're all set.
We're all set. Great.
And we can hear you just fine.
Okay, let me get that up here. Well, hello, everybody. Stan was pretty close. This is the fifth time I've had a chance to do this, and Stan told me that he's going to make me do this until I get it right.
Not true. You had
Not
it
just
right from the get-go.
Just having some fun. Anyway, what we're going to talk about today is kind of complementary to the talk that was actually about a year ago to the day. We'll talk some background information, why we're interested in the thematic ETFs primarily right now, although we'll start talking more about thematic stocks as members of those ETFs. We'll talk about the growth of thematic ETFs. There seems to be a lot of interest in creating these ETFs now, although a lot of them don't make it because they never attract enough assets under management. Just a reminder on the tools and methods last time, we're not really going to get into the trading quite the same way. We're going to update the thematic ETF watch list. So this will be the 2021 watch list. I want to show you an ETF watch list that I run in the background so I can understand the performance of a group of these ETFs. This is from 2019. We'll talk about the ARC ETFs as examples. There are actually 8 ETFs, but from ARC Investments, 6 of them are ARC ETFs. The other 2 are one for Israel and one for 3D printing. We'll look at quite a bit at thematic ETF performance. So if you like performance graphs, you're going to have a great time. I will look a bit at thematic ETF holdings just as a starting point. Obviously, when you switch from the ETFs to holdings of the ETFs, you're looking at a substantial amount of more maintenance of watch lists and things of that sort. But there are opportunities there, and we'll talk about those, and then we'll summarize everything. Some reminders in background. This slide has been in at least one of the previous presentations. Our motivation for looking at thematic investing right now is the 4th Industrial Revolution. I've got my here. Just to give you some quick information, you should look at this further if you're interested in these to get some sense of why the technology is driving business, which is driving finance, which is driving investment, in our case, actually trading. The first industrial revolution was focusing on things that could be done with the help of water and steam power. The second, this started in the late 1700s, I think actually in the UK and the US, with the mechanical loom being powered by water and steam. The second industrial revolution occurred because of the availability of electrical energy. And importantly, the part of this it's not emphasized is the assembly line, dividing work up into smaller parts where you could less skilled labor can perfect a part of the assembly process. For example, Ford and the automobile. The third industrial revolution was because of electronics. The invention of the transistor forced a whole range of changes, invention of computers, lastly ending up with things like the personal computer. Also part of this is social media, the things that we already have, the Facebook or Meta, whatever you want to call it next. And then fourth industrial revolution, which is started around the year 2000, is a connected world where things are put together and they perform different things because one system can exchange information with another one and decisions can be made automatically. And for example, the autonomous vehicle is going to be a connected system because it's going to have to get information about other cars. If you look into this technology, you see that some of the technology is cars talking to each other, talking to stationary transmission systems and so on. But the Internet of Things is playing very big in this. The only things I want to emphasize on this slide is we're certainly going to have higher productivity, but we're also going to have a lot more complexity. Another reminder here, all I want to say here is that the fourth industrial revolution consists of these and other things. Probably the most important one of this is artificial intelligence. I remember when I was in college 40 some years ago, artificial intelligence and things of that sort was in its very first generation. But now we're moving along very quickly. Systems are going to be unbelievably capable over the next few years. And when you tie these together through connected internet and Internet of Things, unbelievable things are going to happen. This is going to provide opportunities of all sorts. I do want to mention some challenges. It is helpful to know the background of this in prioritizing both stocks and ETFs for thematic investing. One of the key concerns, by the way, this is from an India website, is that this revolution is going to increase inequality in the world. And what that means is that primarily smart robotics is going to replace unskilled labor, as it already has done in the assembly line in the third industrial revolution. This is going to accelerate. And as I like to talk to people about robotics, is the game is over when robots are capable of picking strawberries. And it sounds a little crazy, but strawberries are very difficult to pick. And getting mechanical systems that can identify ripe ones and pick them, the game is over. Robotics will be able to do everything at that point. And when robots are combined with other robots, it's going to be actually very interesting to watch. Now, this is a proviso that I'm a little bit concerned about, the last one in red. 35% of the UK workers and 47% of US workers could lose their jobs to technology over the next 2 decades. And this was 2016, so we're not completely full. We haven't fulfilled that time frame as of yet. But keep that in mind. These people who have some skills will have to find new work. And as you know, going from one area to another area in terms of skills is not an instantaneous process. So there's going to be a lot of social issues related to this. Now, importantly for us is the idea of megatrends. Looking at long-term changes, they affect government, societies, and economies permanently. And then they'll drive our financial markets in terms of sales growth and innovation, the things we're looking for. And some of these megatrends that are still underway is urbanization. Certainly in North America, Europe, and other areas, urbanization has gone pretty far along. But in other parts of the world, they're still undergoing urbanization, and still 60% of people in many countries are in non-urban environments. So you say, well, urbanization, what does that mean? Well, it means we need more concrete, we need more steel, we need more buildings, we need more transportation, we need more communications, we need more technology, and obviously we need more power, because people living in a city consume more power on a daily basis than people living in the country. And the things to keep at the top of your list: rapid urbanization, the big one, climate change. Something that's forcing us here is resource scarcity, and we already see this with primary materials, lithium scarcity in different time frames, and other things like rare earth metals, which are important inside things, including your cell phone. There'll be a shift in global economic power as China and then later India evolve, other parts of Asia. The shift in economic power is moving from west to east. The big demographic change is related to aging. Certainly China, Japan, and many countries in the West are aging quickly. There's a saying I've seen in a couple of papers: will China grow old before it grows rich? China is aging, just like Japan has done in the past. And technological breakthroughs. Well, we start with with computers, we go into biotechnology. There's a whole range of things to keep an eye on there if you're interested. Our thematic investing is basically trying to identify macro level trends. And you'll see later in the watch list, we convert these trends into themes so that we can compare ETFs and classify them. And but by the way, this is an interesting article. It's a Global X article, why your portfolio should go thematic. It's something to keep in mind, but also keep in mind that thematic should also be associated with the word trading, not investing. It's very rare to find these ETFs where you buy them now and set them aside for retirement 10 years from now, or 20 years from now, or more. Let's look at the growth of thematic ETFs. Let's start with this graph here that I got out of Statista. This is a list of number of total ETFs in the United States, starting back down in the bottom here, 2003, with 123. Go 17 years later to last year, and there was 2,200 ETFs, almost 20 times as many ETFs. Also, though, keep in mind that the number of ETFs is deceptive in the sense that the total assets under management for all ETFs is still a smaller part of the amount of money in mutual funds, for example. Now, if we look at the growth of thematic ETFs, I picked up the last 5 years, ending here in late September for 2021. I mean, to put this talk together took me the better part of a month. So I've only got up through September on 2021. We started 2017. There were 271 new ETFs created. 10 of them were thematic. As we move down the list, you see that there's an increasing number of ETFs being created, but there's a substantial growth in the number of new thematic ETFs. You look here, 58, and that's only through September, so we still have 3 months of growth, and I know already of 7 that have been created since that time frame. Keep in mind too that not all the thematic ETFs are worth investigating or keeping track of. For example, I believe there are 9 ETFs in marijuana. Well, there's only so much money going to go into that theme, and certain ETFs are going to do better than others. But at the same time, if you look at the cloud ETFs, some latecomers have done better than the original ETF. One other thing to keep in mind to get an overall picture of thematic ETFs is this chart is from Bloomberg. It was March 31st last year. It shows 2 different things. The chart on the left shows assets under management in billions of US dollars. On the right, it's the number of thematic ETFs over time. What I want to point out is, let's start with the number of ETFs that are considered thematic. Back in 2015, there's about 35 of them, according to the chart. By 2020, that number grew into the upper 120 range here. So you're looking at the black line along this point is the growth in the number of ETFs. Now, I can dispute the number 135. I actually track about 250, 270 ETFs that I consider thematic, but that's a whole other discussion. Things to keep in mind is which ETFs are more interesting to keep track of than others. And that's this area here. We have disruptive technology, people and demographics, and physical environment. Now look at this orange color right here. The growth of thematic ETFs that are related to disruptive technology has been phenomenal. Down here, you got, I don't know, 5, 6, 7 of them. And look at the growth. Most of the ETFs are related to disruptive technology. That's a clue. Well, maybe a clue of a hammer in the forehead. But if you look at the other areas, people and demographics, their growth has been relatively small. I mean, you have, what, about 8 or so here, and here you might have 10 to 15. So, and similarly with physical environment, you're looking at ETFs for clean water or ETFs for I'll leave it at that. There's a long list that comes to mind. It's started out actually as the largest list of ETFs and on assets under management, and has grown some. So the bottom line of this is most of the money going into thematic ETFs, which is this orange curve here, or the assets under management, is handled by disruptive technology related ETFs. So if money is going into these at a higher rate, more likely in the market that the prices are going up, because the ETFs are growing because there's a demand to buy them. Okay, just a reminder real quick of the tools and so on from last time. We mentioned that all of these, I just want to make sure you understand that we're now increasing over time the number of watch lists from an ETF watch list to ETF to stock holdings. We're not going to get into much of that today, but we'll start touching on that. The market timing graph is very important. The watch list average graph. We talked about entry and exit rules. You should go back and look at those, crossing EMAs, MACD, RT, and so on. And the importance of these types of pro trader searches. Now, I want to emphasize again that doing these searches on a daily or every other day basis allows you to sort if there's performance going on. Did an ETF actually, did the 3 cross over the 8? Or if you're using a different pair, did the 10 cross over the 20 or so on? Did the crossover occur or is it about to occur? The other important thing is, since you're checking these against a watch list, it reduces the number of graphs you have to look at every day or charts. So the number of charts is reduced. So right now we have about 60 ETFs in the new watch list. You don't want to look at 60 charts every day. So if you run the pro trader searches first, and then there's all of these are possibilities, you can reduce the number of charts to look at from 60 roughly to maybe none or maybe 2 or 3. And finally, something we'll talk a lot about today is performance graphs. We're going to add a couple of other ideas in to get a sense of where these ETFs are going with respect to other groups of ETFs based on VectorVest. Okay, let's look at the update of themes for the thematic watch list. This chart is divided into 2 parts. The left side is the original 2020 list here. And this is the new list. We're going to move from 17 themes to 22. And we're going to do a little reorganization. Now, on the 2020 list, we're dropping out drones because last year there was only one ETF related to drones. It's iFly. And it was morphed into a different ETF. And so there is no ETF to represent drones anymore. We're going to change solar energy and split out energy into a couple of themes. And then technology materials, which included lithium and rare earths, are going to split separately so that we'll have lithium and a new ETF in battery technology. So everything in red here is removed. On the right side, the 2021 list is the new theme list. First, we're adding in ETFs related to aging, which comes from the previous discussion of how that's a very important concept for the next few decades. We're going to split out energy into energy renewable, and we're going to split out solar separate. We're going to add a theme for millennials. We're going to have rare earth elements will just be the REMX ETF. And certainly because of the pandemic, of people working remotely, remote work is important, especially since a lot of those people find it better to work at home than anywhere else. The ETF update that'll go with this, the full list is at the end of the talk, is with these themes, we're going to add for the aging population theme, we're going to add these 3 ETFs. We're going to consolidate lithium and another ETF battery into battery technology. We'll make energy renewable be these, iClean, QClean, and ACES. Energy solar, we're going to add 2 TAN, T-A-N, Rays, which is a new solar ETF from Global X. Millennials will be MILN and Jenny. And these 3 for online retail, which is still important. Working from home, there's a space ETF from ARC called ARCX, and we'll add in an existing ETF to web internet ARCW. As I mentioned, we're moving drones. iFly doesn't exist anymore. And I've decided that the way I tend to trade and so on, I'm moving leveraged ETFs. There was only one UBOT out of this particular list. So now we end up with 22 themes and 58 ETFs, about a 20% growth. Plenty of ETFs. Many of them are performing well, and some will be, I hope, performing well in the future. Okay, let's shift gears a second here. This is a performance of a portfolio I've been running since early 2019. After or before one of the previous talks, I decided to just throw a handful of ETFs plus my benchmark, the Qs, down here bolded, into a VectorVest portfolio and just let them run. And as you can see, they follow the market very nicely. You have the high here in 2020 February. You have the March 23rd pullback. You have this beautiful growth curve, and then you have some hard work here because you're trying to figure out more often what trend the market is. I mean, it's rare to see a 1 year plus trend like this in the market. And if you followed it, you made quite a bit of money. Notice in here, this is just alphabetical, but the kinds of gains for most of these in terms of return on investments are very high, 158 and so on. But again, the point that I'm trying to emphasize is this is not what you want to do with your money. This is to understand the purpose of the ETFs and how they perform together with the market. They perform in tune. Because if, for example, if you were using this for a retirement fund, you don't want to be in any of these ETFs in February of last year, the day before you retire, because you're going to lose a large amount. And we'll show you that in the next slide. Let's break this portfolio up into 4 time zones from when it started 1/18/2019 to the market peak on 2020 02/20, the bottom of the market, the high in the market here, and then the date that I did this work early in October. This is a collection of quick tests that are helpful to understand the cycles that are going on. First of all, I just put up my benchmark here. My goal in trading these is to do at least the Qs plus 3%. I consider that successful. Anything else is less than successful, and we'll go from there. There are 4 or 5 quick tests. The first one covers the first cycle from when I started to the first market high to the COVID bottomed to the high earlier this year to the when I completed this, and then the overall. So you have 5 different sets of quick tests. What I've done is when the bottom here on the first column, you see the Q is 42%. Whenever I do better than 42 plus 3%, I put it in green. So we got 2 winners in this time frame. And remember, this is not a particularly strong time frame, but I certainly could live with 37% and 39%, but the goal is there, and 40% here. Notice that rare earth materials actually lost in that time frame 12%. Then in a very short 1 month period, column 2 here, all of these lost money. The Qs lost 27%. But if you go back and look at all of these ETFs, they lost more money than the thematic ETFs lost more money than the Qs. Now let's go to the best cycle in this collection. This is the one from the bottom of the market to the high of February this year. There's some unbelievable numbers. This is only 97% for the Qs, and the cybers picked up 90, about the same. Everything else did better. In the fourth column, we see again from mid-February to early October, a lot of bleeding here. The Qs made 8%, and many of these lost money. The Robo lost 11% and so on. Only one, and this is a mistake, this should be in green. It's one of the cyber made 9%, but it's not the 9, I mean, it should actually did make 11% as it should. Now, if we look overall, the Qs in this time frame made 188%. The ARC Innovation made more, 193.9, and the solar energy made the most. It's a huge amount, 284% roughly. Let's break this down a little bit. As I mentioned, in the first cycle, ARC Innovation and TAN did better than the Qs. In the third cycle, from the market bottom and the COVID bottom, as I'm calling it, look at these gains. The 2 ARC Innovation, ARC Web, made about 300%. The FDN is an internet one, and the fintech one, they made in this range here. So we got a lot of winners here, but the ones with the yellow columns are all in the range of 300%, except solar energy, which was 433%. And then again, down in the bottom, we have one winner. rare earth metal seems to be working in a time frame opposite to some of the market. And so we have overall just two winners versus the Qs. I mean, it's easier to just manage the Qs than to manage a bunch of ETFs if you were going to do a whole portfolio. The surprise was that cyber and hack, the cyber security ETFs, were basically the same as the Qs. I was surprised at that. I thought they would do better than they did, but not that they did poorly. I mentioned the benefit of looking at a watch list average graph. Since you didn't run the portfolio, you could certainly input, if you haven't done it, or update the thematic watch list and run the watch list average graph. And it gives you the same type of picture. What I have here are the typical things that I put on a graph for trading. You know, I usually start here with the searches. This would be 3/8 EMA. And of course, we got some whiplash here, and we go up. Another entry point is at 40, the 40 SMA over price up to here. And as you can see, in this area, we have two very nice growth ranges. Now, one of the things I do keep in mind, in addition to looking at the MACD and so on, is I look at the trend, and when the price is moving roughly parallel to the 40-day moving average, like it's doing here, I worry less about the crossovers like 8/3 or MACD and so on, unless there's some unusual volume spikes. You see some here. And certainly RT is a help, but it's one of the clues. It's not all of those. Down in this range, the MACD, and here too, the MACD kind of whipsaw you all around. So being above the 40 SMA is enough in this longer trend range. You get over here, you got to do a lot more work. Okay, let's look at these ARC ETFs. There are 6 of them. The new one is the one on space. Over here, it's only a few months old. I think it was started July. These ETFs are actively traded. Keep that in mind. If you go onto the ARK Invest website, you can actually sign up for and get daily emails, because this is also full disclosure. In other words, if they buy something or sell something today, they will send you a report by, I guess, mid-evening, late evening. I typically see them, and you can find out what they're trading, which is a much better clue than trying to track contents of an ETF yourself. I want to do some comparisons using performance graphs in VectorVest. I'm going to start out from this date range. Got here February 11th last year, October. I'm sorry, November 11th last year to October 8th when I ran all of these. And as you can see, if you have SPY by itself, it made this nice curve and did a pullback. Then I want to compare it to the Qs. Now the Qs have been choppier. You can see the Qs did better, and then they did a dive, and so on. So for my purposes, this time I'm going to use the SPY for the performance graph, because it gives you the same information, but with a little bit more clarity than the Qs, since the Qs were doing some growth cycles versus the SPY. If we compare to some VectorVest, we're going to do comparisons to ETF collections within VectorVest. For example, this one is the US large cap ETF list. And it's no surprise that when you look at the large cap ETFs, they all seem, I mean, the curves look very similar until you get up here. SPY lasted longer in growth and then did the pullback, but the large cap ETF list pulled back earlier. Then I want to compare this also, SPY to Etf Sector Energy. Now, why I'm doing this is I obviously have some energy related thematic ETFs, and I'd like to know how they're doing. And by doing these types of plots, which are very easy, you can set them up in your watch list, you save the watch list, and you pull these up and you can run these every day. So as you can see here, the energy went crazy in this cycle. From down here all the way up, and another cycle here, and so on. And a pullback, we're currently, and this is up till October 8th. So I don't know. I haven't looked at it in the last couple of days getting ready for this talk. If we look at the sector's financial ETFs, we see the same kind of thing. It's a pull up here, and then they did better, especially in this area here. So we should be looking at financial related ETFs. I don't know how fintech in particular performed. I look at too many of these to remember them all. And then we look at the sector technology. We know thematic ETFs, the best ones in terms of performance are technology related because it's disruption we're looking at, and technology is the primary disruptor. And if we look at the charts here, we can see that the trend started up very strong. There was a strong pullback around March of this year, and then relatively flat, although you could have got in here and done some work too. And then finally, the specialty ETFs, which are the thematic ones in this case, did have performance like this. If we look at their trend performance, you have it going way up like this again through, this is about maybe mid-February, then a pullback, and then a flat area and a trend down. So the last half of this year has been a little bit more difficult, and you saw it in the quick test to make money using thematic ETFs. Now this collection here is a little bit complicated. All I want to do is show you all the ARK ETFs at one time and their general trend, because this is a kind of a thing that's a little bit unusual. You see, from the beginning in November, these things all went up. So you got this kind of general curve. Then they went down, and they went across like this. So the trend line looks like this. You have this range from ARK Genomics here, which went up fast. And then you have the financial technology one, ARKF, went up and then went up again. And so it's been a lot more work to trade these than it would be normally in the trends like the one that finished up before this. Now, what I want to point out too is that some of these ETFs did better than ARK Genomics. So this collection down here, first let me remind you, this is SPY. This is the ARK ETFs, kind of like that. The genomics one is the one that's in this red here. It's kind of a washed out red. Solar I put in is this gray one that's up here, kind of the peaks, for example. And blockchain. Blockchain has made somebody a lot of money, made me some, but look at the growth here. I mean, you're going here from 40% to almost 140%. It's an enormous growth in a short period of time. And it's been doing this, and it's still doing this. It's one of the highest movement of ETFs. If I go and look at just this one time frame from basically, let's put, we're going to do a quick test right here, sort of. From here, which is January 27th this year, to February 9th, just 12 days, it made 43%. Very hard to catch, but you certainly could have caught this move from here to here, or some part of it. I mean, this is the kind of thing where I usually think of thematic ETFs as something I can do on a weekly, monthly basis, and here it switched into, for block, a daily, weekly basis. In other words, a week, 6-7 times more often looking at the ETFs. And then when the ARK ETFs, which we were watching, are doing this, and SPY is doing this, we already talked about block. Look at REMX. It's moving up. It moved up here with block, then it went back, and then it kind of did this, and then picked up again. So this is in the watch list, and this is the reason I talk about doing these searches, because you're not going to pick these things up by doing 60 graphs a day without going cross-eyed. And it's been brought up before, but uranium, which is not a thematic one specifically, has been doing well, especially in this part here, last few weeks. And I want to mention Google, which is of course an expensive one. We had the ARK technology robotics one. Google just been a nice curve. and we draw the lines like this. And here's a graph. I mean, this Google was something that you couldn't do wrong with if you had to. I mean, you move in here, you move out somewhere up here, and you have this entire range. Remember, above the 40 line, I mean, it went from roughly 2,800, it ended up at, and roughly 2,100. So you have a $700 growth, which is a third of this in less than 6 months. So you're talking overall 60% growth in one stock in that time frame, and it was very, very smooth. This is something I don't see that often. It didn't pick up a lot of, and if you try to do only 3/8 EMAs, you got thrown in and out so often. So this is just emphasizing several things: the trend and the use of the 40 SMA as a check on the trend. And if your price doesn't hit this line and go through it, you have a hard decision. But many times it's better to stay in it for a while. The only proviso, of course, is I also run an 8% stop loss on these. That's another warning. Okay, I wanted to bring up one stock that appeared in 5 of the ARC ETFs as an example of what I call opening the baskets for ETFs. All this information here you can read later. All I want to mention, it's a data integration and software solutions, and it's a government and social segments. So it depends, for example, on government contracts. I think mostly U.S. government. This stock was crazy. Here again, here, the ARC 5 ETFs. This stock, Palantir, was in all 5 ARC ETFs in early October. And its performance was unbelievable. It shot like a rocket here, shot like a rocket here, pulled back, it moved up here, and here you go. And now it's not on here, but it seems to be pulling up again. I would suggest if you're interested in this, do some serious reading on it. Some people say it's going to shoot again, but it depends on government contracts and to some extent. And there are some questions in there that you should review. But one of the reasons for looking at ETF holdings is to find these opportunities and decide whether you want to try them or not. This one certainly starts to come into almost a day trading range. A couple other reminders here is when an ETF is going up, not all the internal stocks or all the holdings are going up in the same trend. Some will be going up, some will be going down. So if you want to do better than an ETF, you need to understand which of its holdings are doing better. And so for the ARC Innovation ETF shown here in the dotted purple line, peak in this area, we have Q and the SPY down here, which are kind of level and easy. Tesla's been mentioned. It's been another rocket. Roku was another rocket. If we look at a couple of time frames, I'm going to pick this one out right here. We'll do a quick test on these from November last year, 11/10 to February 12th this year. We're picking for the second time point this ARC peak just for curiosity. There's no particular reason. Obviously, this is a bad choice if we were interested in Tesla, but we're just trying to see what happened to roughly this time frame. And so let's go over to the quick test results on the right. Again, November 11, 2020, 2/12/2021. You're basically looking at 2 months. And here's the Qs. I highlighted it here. Qs did 18% in that time frame. SPY did 10%, 11%. Here's the VectorVest composite, showing you what the market's doing and how the VectorVest holdings are doing. And look at all of these. This is Roku, 116%, 2 months. Tesla, 100%, 2 months. The ETF itself, 65%. Now, the poor performer, Unity Software, only did 26%, but it meets my 3% criteria. So from that point of view, the Qs plus 3%, they're all winners. But I'd rather not have money in Unity Software if I know what to look at. And you can find all these things, again, with the right ProTrader searches. Some other time frames, just to sweeten this a little bit, from point 1 here to point 2, Roku and Tesla did about 50% in a month. And the second time frame, point one is in early June. It goes to early July, and Roku did about 60%. And from early June to early October, Tesla did about 60% in 4.5 months. So performance graphs, pro trader searches, watch list of holdings, they're all useful. This ETF gives you the updates of those holdings on a daily basis. Okay, wrapping up here, we have, this is the new watch list. As I mentioned, there are more themes, and there are now almost 60 ETFs. Now, I picked these out of a list of about 250, 275 ETFs. They're not all superstars. Some are, I think, should come on, like the work from home one are coming on. Some of these are based on themes like aging. I suggest you build the watch list and you take a look at this. You want to do some interesting things. For example, down here, TAN, in solar energy, TAN's been around for more than a decade. Now, while Global X thinks they can do better than TAN with an ETF is kind of interesting, but it's worth looking at. If you look at cloud computing, I believe Sky was first, CLOU was second, and then the Wisdom Tree one was third, and the Wisdom Tree one has been more interesting to me. And then finally, Block in the blockchain set has been doing phenomenal things if you can ride that horse. I want to mention a couple of quick things in closing. Beware of some things. Now, this is a chart. Remember the dates, February last year. I couldn't find anything similar in a reasonable time frame. It's from Bloomberg. And what it shows is thematic funds asset under management. In other words, how many dollars are actually held by these ETFs from an investment point of view. And this is a change. And you can see here, there was a peak here. That's roughly in 2016, and then a drop off. You say, well, what happens here is that people are moving into investments that they think are better short term. So it is helpful to know if money is flowing into these ETFs at the moment or flowing out. If it's flowing in, it usually means that something's going on and prices are going up on the ETFs and certainly on the internal holdings. So this is another, it's not a primary thing, but it's a secondary thing you should keep an eye on. Then in summary, we looked at the background and drivers for thematic ETFs and thematic investing, primarily looking for changes that have a large impact either on government or the society and so on. We saw a dramatic growth of ETFs and particular thematic ETFs in US investing over the last 10, 20 years almost. We identified tools and methods from the previous presentation, emphasizing go back and look at pro trader searches to save you time to pick the right charts to look at on a daily basis. And we looked at charting and performance graphs that you need to consider. We updated the thematic watch list with new themes and ETFs, and we discussed the performance of thematic ETFs from early 2019. Also, we identified major ARK Invest ETFs as examples for performance studies. Remember, of the group, these are the only ones that are really full disclosure. And if you go to the site, you can find out how to, their ARK Invest site, and find out how to get the daily buys and sells on the ETFs. That is helpful in knowing if they're buying a stock, you might want to look at that stock. We provided data that summarized the performance of thematic ETFs over the 4 market periods. We showed that there was a very profitable period from the COVID pullback to early this year, but otherwise there were times when money might have been placed elsewhere. We discussed in depth the performance of thematic ETFs in terms of sectors and industries, so we can decide, do we want to invest at this time or not? We can compare the performance of the ETFs with respect to other thematic ETFs. And in terms of all those performance curves, how did, for example, Block do compared to the ARK ETFs, which did pretty well early on this cycle? And then we hinted the value of opening the ETF baskets. In other words, identifying and traded select holdings that are performing better than the ETF. A reminder there is holdings in an ETF are not performing the same way as the ETF overall. The primary reason, one of the primary reasons that the ETF was created is to take a collection of stocks at which average performance is doing better than some of the stocks. So you need to open up the ETF, look for winners. In other words, stocks that are doing better than the ETF, and then consider them for a potential investment. Thank you.
Thank you, Ed, and wonderful comments coming into the chat box. Really appreciate it. I'm going to take back the screen, and then I'm going to ask a couple of questions that maybe came in, if you don't mind.
Sure.
I'll give you a chance there to grab a water if you need it. You did a terrific job. My goodness. So I'm going to show my screen, I think. Yep, there it is. Okay. So yeah, wonderful insights again. And so we're seeing that in the chat box. Excellent presentation. Just extremely well presented. And Ed, just if you can confirm what I'm sure I think you might have said, and that was about sort of when to get in. And you talked about the growing assets under management as an indicator. Just because you see money going into the ETFs. Can you maybe explain that a little bit more, or do you think?
Okay, yeah. There's so much information here that I don't look at assets under management in detail all the time. Now, one of the things to mention there first is that I have broken the ETFs up, and this was done in an earlier talk, I think the first or second one, that I grouped the thematic ETFs in terms of how much assets are under management. And if they're under $100 million, I put them into a more risky category. If they're between, and I give them a red light, if you want to call it that, between 100 million and a quarter of $1 billion of assets under management, I'd give them a yellow, which means they're safer. And then above $250 million, I give them the green light, which means that they're safe. And what I mean from that is that they have enough interest. I noticed that there are a lot of ETFs. Some of them are surprisingly still around with assets under management significantly below $100 million. And I don't know, certainly when you get down to $10 million of assets under management, there's not a lot of money made to pay the expenses of the people that are running the ETF. So I use the assets under management for the individual ETFs to kind of give me a sense of relative risk in terms of them going out of business. Now, if an ETF closes and thematic ETFs and other ETFs close all the time, there's probably several dozen a year, they just don't get enough interest and they disappear. It's basically like a closing sale. They take the assets under management, subtract off the cost, and then they pay off all the shareholders. Well, I don't know how long that takes. I don't want to experience that except, in writing by somebody else's. So I look at assets under management. Now, assets under management for the whole group of thematic ETFs is very hard to find. And there's no one place to look for that. So, but when information is available, I just try to alert people that when the assets under management is growing, obviously people are buying the ETFs. And so there's interest in the ETFs, this group of ETFs, and the price should go up if the market's going up. And converse is true. This is not a big group of assets. I mean, they're billions of dollars, but they're trillions of dollars in mutual funds, and in all ETFs, there's, I think, $2 trillion investments in the US. So it helps to know how, let's say, solvent the ETF is, and assets under management is one way. You can find that information. I usually go to a site that I subscribe to called ETFDB. And it's one of the, and there are other sites, but I don't use them enough to even remember them. So
Yeah,
it's a clue.
Your chart on the total number of ETFs over the years and how it's grown and how thematic ETFs have grown was really, really eye-popping. It's just an amazing growth. So,
Well, I think the number this year will probably top 50.
yeah,
That's unbelievable.
it really is. All right. Well, listen, lots of great comments coming in. Emmanuel and Jay are really wanting to hit 200 likes. And I think we can do it before we're done because it was such an amazing presentation. I just jotted down a really interesting comment from Erwin Blank out of in Regina. He said, the fourth industrial revolution has created VUCA, VUCA, volatile, uncertain, complex, and ambiguous. We have to be fast on our feet, or our investing feet going forward. Dr. Subak's insights fit this well. So
thank you.
I think that's the sentiment across the board, that you've given us a lot of insights, and your list of ETFs is amazing. We just passed 200 likes, just like that. So thank you for those people that pushed the button, and thank you, Emmanuel and Jay, for pushing or urging people on that. It's great to recognize the work that's gone into a presentation like this. So, Ed, thank you so much. I had several questions come in about the searches, and I'm going to just go through the presentation from the past. And when I send out the slides, I'll send in the link, if you don't mind, to that presentation where you.
No, it'd be great if they could look at that.
Yeah, those are terrific searches. They've stood the test of time, so I will definitely send that. Now, just a reminder to everyone, you're not going to get the slides from me this weekend. New process here where VectorVest is going to send them out. Because there's just too many for me to handle, to be honest with you. And so they're going to send out the slides, a link to the slides, and my email, but it'll be Monday instead of on the weekend. Okay, so just to let you know. So with that, I'm going to say thank you again to Ed, and thank you to Dr. David Paul. And I'm going to just wrap up here with a couple of comments. Those thanks again. So just a reminder about the Tampa 2-day. You're not going to see this price very often. I think it's a little bit COVID driven, but it's a tremendous price, $95 for the 2-day seminar. You can come in person if you want to come to Tampa. That would be great. Love to see you, although I'll be there only on live stream. But the live stream is another great option, and in either case, you get the video recordings to keep for 1 year. If you want to go to Tampa and attend in person, just go to VectorVest.com/Tampa. And if you want the live stream, VectorVest.com/stream. All right. And then here's the agenda. I don't think I showed it before, but going from the basics to building and managing a retirement portfolio and situational investing relating to the market timing, complete approach to short-term swing trading, improving swing trading accuracy using volume analysis. Here's my favorite, swing trading with moving averages, and finding hot stocks for explosive profits. So I think a really solid agenda. Whether you're a swing trader or a long-term investor, you're going to find some real valuable insights here. So love to see you there, although I'll see you just on the live stream personally. And then finally, I know we've got some people that are new to VectorVest in the room, and you can go to VectorVest.com/INTL forum, or call our support team 1-888-658-7638 and give VectorVest a try for 30 days for $9.95 US. So great comments still coming in. The presentations were excellent again. Always appreciate that, and a lot of work goes into them. So thank you so much again, Dr. Subak, and to Dr. Paul from myself. And again, this is Stan Heller, and I'm just signing off, but I love to see those comments coming in. Michael says, please show that sign up page. Yep, there it is right there. I think this is the one you meant. And VectorVest.com/Tampa, VectorVest.com/stream. All right. Thank you, Barclay. Appreciate your comment. That photo was very flattering to me, wasn't it? I think my wife would agree with that. All right. Well, listen, thank you so much, everybody. Have a great rest of your weekend. Look for my email on Monday. It'll be coming from the VectorVest team, but I think they'll put it from me. So you can look for that on Monday, and that'll have the slides for you. And I'll remember to put in the searches that Dr. Subak shared in a previous presentation. So thanks again, everyone. Have a great rest of your day and weekend. Great to have you here. Take care, everyone.